All right. What's up, everyone? So, I'm going to be reviewing the past week of price action and looking at anything I can find. So, hope you guys enjoy. I'm going to maybe be listening to music. I don't know. Maybe for the beginning. But, I'm just going to be reviewing price action here and taking a look at what we had going on. So, let me know if you guys, yeah, let me know how you guys are doing. And if you guys need anything, just message me. So, but I will be talking, though. I will be talking. Okay, so to start things out, week opened up. What up, Ethan? Week opened up, and we basically had this curve that remained high resistant. So, dang. This was a very important part about the week, right? We had this high resistant liquidity in this new week opening gap here. Kind of already reviewed this though. Where'd the week open here? Actually, let's look at stat map. Wow, the low was right at that weekly distribution level. Wow. That's pretty cool. Is it actually? Wow, look at how precise that was. So, I guess we'll start out with this. This is the most obvious thing, right? High resistant liquidity into the new week opening gap. Oh, true opens. So that's kind of cool. So watch how the market interacts with true opens here. This is actually going to be a super interesting case study, right? So watch this. So, start the week. Here's true. This is the true month open. Check this out. So, true month open is the opening price of the the second Sunday of the month. So, bang. So, we're above that. Then we have true week open here. That gets manipulated. Guys, true opens, I really think true opens are like the missing piece of the puzzle of trading that is trading. Like, if you can just make sure when you identify the manipulation that it occurred below the consecutive true opens of each cycle, it's crazy precise. So here's true. It's time-based premium and discount, right? So true month open, true week open, and then check how the manipulation occurred above that. Okay. And then I'll also pull up midnight, right? So let's just make it right there. Make things easier. And then midnight. Where's midnight? What the heck? Where's midnight? It's not drawing a line for midnight. We might need a new one. And there's 130. So my point with this, so it's a little messy, but my point with this is when you use true opens, hey, what up, Jill? My point with this is when you use true opens, consecutive true opens from top down, so the monthly true open, the weekly true open, the daily true open, the session true open, you can get very precise with identifying the manipulation. And it's really, really cool. Like, I don't know, like, I think most people just don't really understand it, to be honest, because it's just that cool. But let me show you guys, right? Midnight. And the reason, like, it takes time to really master how to utilize it, right? Because I can see it in hindsight, but being able to catch it live, it's hard. But if I zoom out, right? We're above true month open, true week open, midnight, true session open. The final manipulation leg occurs right here. And so we can use true opens to identify, okay, this is a high probability area for high of the week. And I think we had an SMT too. Yeah, we had SMT, a giant SMT with this high. I remember when I was looking at this, I was like, I could see it's going lower off of this. So let me try and reframe this so it makes more sense. So, right, we come above all the true opens. The manipulation happens here. So what kind of weekly profile was this, by the way? Midweek reversal, right? Because Monday and Tuesday accumulate. Wednesday makes high of the week into our 1 hour premium, right? It's a 1 hour BPR. It's a reclaimed BPR, actually. We could actually mark it out like this. So, alright, we push up into the new week opening gap. 1 hour reclaimed BPR. High resistant liquidity. And then an SMT. It's actually, I think it's a partial previous week's high SMT, meaning it's not with the actual high of the week, but it's still previous week's high. So you guys starting to see what I'm saying, right? We use true opens to filter out the noise of where the manipulation is likely to be. We can't like if we're above all these consecutive true opens, we can deduce that this is a higher probability time. Once again, wait for time and price to align for high of the week to form. Once we don't even need to identify that. The thing about it is you don't even need to identify that this was manipulation. You just wait for the break, right? You wait for the break of structure, because the true opens are just helpful for identifying the manipulation. There's always going to be that second entry, which is that 2022 model entry or that change of state delivery retest entry, right? It goes from the high to the 2022 gap, then expansion, right? You don't need to catch the actual soup of the high. You can just enter once we break the low, break a structure for value gap. So use true opens to identify where was the manipulation, right? Use true opens to say, okay, this is the manipulation because we manipulated above all the true opens. So I'm trying to make this make sense. You don't need to soup. And then we know that now we're in a sell model because it was above all the true opens. Now, here's the issue, right? Once again, the opportunity happens in London session. So I really do think that sometimes it's beneficial to be up for that London window. It's not always easy to be up because it's like in the middle of the night for me. So I'm trying to make this not so messy. It'd be like this. Because right now it's kind of messy. Yeah, let's go like that. So now it's maybe starting to make more sense. So, once again, right? Use true opens to identify where the manipulation occurred. Right? From there, take a 2022 model or a flow state to get on side with distribution. Make sense? Dude, where's my 2022 model thing? There it is. So, once again, you don't need to soup at this spot. You can say, okay, this was above all the true opens with SSMT. Now I can look for the 2022 entry or the flow state entry from there. And the same thing happened down here, by the way. The same exact thing before this reversal. You guys get what I'm saying? Type 1 in the chat if you get what I'm saying. We identify the manipulation, and I could almost guarantee we could go on a lower time frame and get even more precise with this. So I could find 322 and then see, oh wow, we manipulated 322 and then we manipulated the true opens. It's all fractalized, right? And then, yeah. And then we can measure out this leg here. So later, maybe this weekend, I need to make an indicator to plot all the current true opens of each cycle. I need to code one. Okay. 11:15:25 Saturday. Use true opens to identify the manipulation to get onside with distribution. Alright, I kind of have to use the bathroom, but do you guys get what I'm saying? Right? Yeah. And then you could go even lower time frame and find a 5-minute change and stay out of this 1 hour gap. Like if I did that. So imagine if you did this, you would identify the whole entire model. You'd be the goat of trading if you did this. And we utilize the wick there. Alright, I have to use the bathroom. guys, this is really cool. It's all about understanding how manipulation. By the way, guys, I can get really in depth with this, right? We can go down to lower time frame, find 322. There's that. Manipulation occurs above every single true open down to the 22-minute cycle. Oh wait, sorry, the 90-minute cycle, and then probably even lower time frame than that. Wow, look, and then look at that. That's incredible. That is beyond unbelievable. And if you don't get it, I don't know what to say. That's wow. I need to make an indicator. You know what? We're gonna actually switch this to a coding stream. Well, maybe. But I need to make an indicator because so let's just see if we can get a baseline one. But I'm gonna have to be so detailed to explain it. I might do it later. I think we gotta focus on backtesting actually. Man, what time was that? 8:15. I want to clean this up. It's kind of messy. So then I can go down a lower time frame, then find 322. Yeah, right there. And then see how precise this gets? We identify the manipulation occurring above that. Okay. My chart is so messy right now, and it's making me mad. Let's get rid of this, because that was just for the screenshot. Let's try and make things a little bit more clean here. So maybe I'll just drag the true opens out like this. So now everything, yeah, I like that better. Like, do you see how it's just time-based premium and discount levels? And then we manipulate, and then we get the sell model. So this is a 1 hour 2022 model. Let's actually get out the weekly profile because I just want to show you guys exactly kind of what happened. From a weekly profile standpoint, we had a midweek reversal. Weekly profile where see how it's a 1 hour premium array and we push into it on Wednesday. Okay, so the market opens up Monday, Tuesday, accumulate. We have relatively equal highs. Ooh, now it just keeps getting better. It just keeps getting better. We back test the NWAG. Partial SSMT. Let's go with 1 hour. So accumulation. Yeah, the best 2022 models do sweep equal highs, relative equal highs. Yeah, the more I study these markets, the more I realize they are perfect. The markets are perfect. And we're above every single true open. Okay, now it's really starting to look nice, right? Now it's really starting to look nice. So now we're finally getting out of the messy nonsense looking stuff. And we're getting to like good looking type of picture here, right? Back testing the new week opening gap, we have high resistant liquidity versus low resistant liquidity. We push up into the 1 hour for value gap into equilibrium. Actually, probably OTE. Yup, right into the sweet spot. If we measure it out from the actual energetic displacement, oh wow, that's perfect, right? So this is your typical ICT OTE, right? Yeah, you can definitely figure this all out, man, from beginning to end. right? And then manipulation of all the true opens, midweek reversal, weekly profile, low resistance, liquidity versus high resistant, because this was high resistant. Now all of a sudden it looks real nice, huh? And then where do we go, by the way? Stat map. We go perfectly to the statistical weekly bearish distribution. Perfectly. Crazy. Alright, I'm going to put this in my journal for weekly profiles. Really nice. You guys just see how this is just a giant 2022 model? That was perfect. Backtesting the NWOG into our 1 hour PD array. Just this. It's just, these markets are perfect. These markets are perfect. High resistant liquidity versus low resistant liquidity. And now all of a sudden this is looking really, really nice. Alright, midweek reversal, weekly profile. And we could, nah. I was gonna say we could show it's a sell model, but it's fine. It's perfect. Okay, mid-week reversal, weekly profile. Perfectly above all the true opens. Now, I could put those on the chart, but it's going to make things really messy. So, I'm not going to. That's so cool. That's so sick. Alright, I'm going to take a break. So what do I mean by when I say all the true opens were manipulated perfectly? What do I mean? Let me show you guys real quick. So, true month open. Yo, what up, Kalechi? Bro, I appreciated you trying to get Dodgy's attention. That was awesome, bro. That was really cool to ask him, try and get his attention. Bible study? I mean, if you want, bro. Not right now, though, because, I mean, I'm in the middle of the stream. But yeah, okay. Every true open got manipulated. I know, it took him forever. Yeah, I know. It was so weird. Like, he definitely knows who I am. I don't know. I think he just didn't want to give me attention. Which is fair. Okay. Trying to find the right template. Oh my gosh, where is it? Whatever, this is fine. See, this is why you didn't want to put the true opens on the chart, because it's going to make things not fit in. Okay, just believe me, okay? Look. Here's true month open, Sunday, 18 o'clock. Here's true week open. Lol. Yeah, I guess so. So I don't want to put them on the chart because it's going to make it too cluttered. It's already kind of cluttered as is. But true month open, Sunday, 18 o'clock. True week open, Monday, 18 o'clock. True day open, midnight, right here. Midnight. True London open, 1:30. True 90-minute open, 3:22. Perfectly soup of the high. And then we go lower. So you want to use the true opens on top of each other. What's it called? Stack the true opens of each cycle on top of each other and use them as time-based premium and discount levels to identify the manipulation to an exact specific time. And then once you do that, you know this is almost certainly the manipulation. You can get on-site with distribution within this 2022 model, right? So that's what I was trying to get at. But if I put the true opens on the chart, it's going to make things too confusing. So yeah, the true open of every single cycle manipulated. Okay. So we've basically reviewed the week as a whole. Should go in the lower time frame and look for actual trades. To start out, let's look at high of the week, right? You could have caught this You could have caught a trade out of this 1 hour reclaimed BPR here. Honestly, let's just have some fun for a second. Let's say that you wanted to catch high of the week using the entry from this BPR. And let's say you knew the draw on liquidity was previous week's low. Yeah, we're going to have some fun here, right? So let's say you are the goat of trading and you're going to be a sniper and you're going to identify that this is manipulation right here. And then you're going to take a low time frame trade within this 1 hour reclaimed BPR to target previous week's low. So let's say you went ahead and did that. So 1 hour reclaimed BPR. What do you align 1 hour key level with? A 5-minute change in state. So we have high time frame AMD, low time frame AMD. Here's the low time frame one. Yo, what up, Medbach? We just reviewed how you could have caught. Well, we reviewed the weekly profile. It was pretty sweet this week, actually. Let me show you real quick. How do I switch my screen? So yeah, beautiful midweek reversal weekly profile using this 1 hour BPR over here, and that's our higher time frame PD array. We got SMT with previous week's high, manipulated all the true opens, really nice AMD. We get a 1 hour break of structure, 1 hour for value gap and premium, perfectly tapping OTE at the sweet spot, back testing the new week opening gap, and then delivery lower to weekly distribution. Yeah, I took a long on Friday. I caught 1.5 R on Friday, which is nice. But yeah, this is what happened. We backtest this 1 hour change in state right here. So yeah, we perfectly tapped that as well. So it's OTE of the displacement leg that breaks structure. It's also the 1 hour change in state. It's also backtesting the top of the N log. And then boom. Right? So that was during London, so I'd have to be awake for that, but still. Beautiful. Just beautiful midweek reversal weekly profile. And then I'm showing how basically we could have taken a snipe on Wednesday during London session, and we could have basically just sent it all the way down to previous week's low. So we're just having some fun here. This probably isn't that realistic of a trade, but I mean, when we get good enough it will be. But right, so we have a 5-minute change in state here. What up, Javier? Now you could use the higher one, and that one obviously you get the exact top. I'm just trying to be realistic of what I would do in the moment. I'd probably use that one, so I'd enter on the retest of this, and then it does go lower. One way you could have taken this with even more precision. So 1 hour. Once again, what is going on, right? High time frame AMD, low time frame AMD. Maybe let's get rid of this for now, right? So 1 hour reclaimed BPR, 5-minute change in state. With the LRLR, it was guaranteed. Yeah, man. Just genuinely just beautiful. So this is kind of what you want to see when you're taking if you want to get a 10-hour trade, what you want to do is you want to find high time frame AMD, which is, for instance, this entire range. We have relatively equal highs, and then you drop down to the low time frame, find a low time frame AMD, and then you get on side to run both. You see what I'm saying? So, anyway, you could enter on either change in state. It really doesn't matter, but let's just say for fun that we wanted to enter as a. I'm trying to think how I could do this. No, I would do it like this. So 1 hour BPR. Let's get rid of this for now, and this, and this, and this. I just want to make things look a little cleaner. And then this was amazing LRLR. I think I talked about this right in the morning, right when I got on stream, and how I wanted to target that, and then I didn't get an entry. But I knew that this market was going to want to come back here. So accumulation, really nice chunk of LRLR here. So this is a great draw on liquidity. Now, once again, you would have had to have traded London. This is why I want to trade London so bad, because I feel like London is just easy mode. For some reason, London is just easy mode. There's always an obvious entry in London. It's so annoying. It's like, it's so easy. Actually, no. Let's mark it out like this. Let's try and make things look as clean as possible here. So accumulation, once again, obvious target, this little LRLR chunk of price action here. Previous week's high S&T. Once again, you'd have to kind of all see this, but it's not easy, but if you did catch all this, it'd be cool. So liquidity sweep. So most realistically, I'm trying to be realistic so I can actually catch something like this. You might just enter on the 5-minute change in state retest here. And then if you just held it, right, you just hold it. So the first we go 2 projections, we come back up, retest it, and then we go much further. No. Let's actually, I changed my mind again. Let's actually try and mark it out how, like, the best way we could have taken it. So the best way was to say, okay, we have 5-minute change in state. You know what? Let's actually use this one. We have relatively equal highs perfectly right here. So inducement above the equal highs, actually triple relatively equal highs. 1, 2, 3. Let's use low time frame true opens for extra precision, just to look at them, right? So 7:30 was right here. Okay, so this was actually in New York, which, you know, it's kind of cool, but once again, am I going to necessarily see it? I don't know. We're above midnight. Midnight's all the way over here. We're definitely above midnight. So once again, this is why I want to allow myself to take trades outside of New York, because like this would be in the hour before I get on the live trading window, and I do think that's okay, but it's only when I have like a ton of conviction. So 7:30, we also manipulate 7:52. So you honestly, guys, always want to make sure you're entering above all the true opens stacked of every cycle. So just something to consider when you're taking your entry, like is it above 7:30? Is it above 7:52? it's a filter you can put on your trades to make sure that you. I mean, basically, this is for when you're souping, I guess. When it's a line time frame change of state, it's different. But okay. So accumulation, manipulation. Yeah, I was watching this live. I wanted to get in, but I'd missed the entry at the high. So 5 minute change of state, inducement of the high. And this is kind of LRLR as well. Triple equal high inducement. And then bang, we go lower off of that. So how could I have taken a low time frame trade here? I'll show you guys. Cause I didn't get on the charts until around like 8:50, and I'd already missed this. So I would just soup above the triple equal highs, and so with that in mind, I'd probably just use this change in state instead. Okay, so this is a flow state inducement. Let's just mark it out like this. Because why not use you could use that change in state, but then it's not really an inducement above the change in state. And then, yeah. So then you can project out the order block like this. 4 projections, 7 projections. I would just say, you don't have to use projections at all here. You could probably just target this LRLR, or maybe you could have targeted 7 projections. No, I'd probably just target the LRLR. And then, yeah, I mean, if you went from body to wick, now the 4th projection lines up right there. That's kind of nice. Let's just say we did that. Once again, it's all about context, how you measure standard deviations sometimes. And then 4 projections. I never measure standard deviations like that. Actually, I changed my mind. I would never do that. Maybe like that. Yeah, maybe like that. Yeah, I like that. I'm going to target 4 projections here. There we go. So I'm measuring it from the change in state here to this high here, ignoring the projection block. And the reason you could target the other line, that's fine. But I think high probability, like super high probability take profit would be right inside this consolidation. Yeah, that's how you could take it. And then obviously you could have held it, but let's see if we went to OT. Yep, right to OT. So that's how you could have caught a trade using that 1 hour BPR. So this was on Wednesday at 8 a.m. So once again, would I have been awake for that? No. So it's kind of pointless, but still I like to mark it out. 8 o'clock. Flow state, inducement. And then 1 hour aligning with the 5 minute. So, man, I need to do a better job of making the market recaps every day, guys. I'm so sorry. Like, I said that I was going to work on it, make the market recaps every day, and then guess what? Like, I stopped doing it again. And I'm like, I mean, well, what I mean is I should have made one on Friday, right? I made one on Thursday. I should have made one on Friday, and I didn't. I'll be right back. I gotta blow my nose. So, okay, so what we're going to look at is how could we get in, because I don't get on the charts till 8:30, right? And that's on a good day. Sometimes I get on the charts at like 8:55 or 9 or something. So how can I get in? Well, we knew the draw on liquidity. We knew the sell model. Let's get rid of true open. Once again, I love using true opens, but sometimes putting them on the chart makes things a little cluttered. So I think I'm maybe considering just taking mental notes of true opens. Like, oh yeah, I know we're above all the true opens, so I know this is higher probability. I don't need to actually have it on my chart because it just makes things more cluttered. Does that make sense? That's something I need to work on. Like, it's a mental thing you have to like record in the chart. So we could say, okay, let's just use this inducement as just a regular manipulation because every inducement is really just a manipulation of a low time frame cell model. So let's identify this as manipulation, right? So this is how I would do this. Manipulation. And then, right, we have a break of structure fair value gap in here somewhere. So we're going to use that as our higher time frame key level. Right? What do I mean by it? Well, 15-minute BPR. You go like this. Mark this out as a BPR. Bang. So now we have our higher time frame PD array. This is in premium of the displacement. This BPR is in premium of the displacement. Boom to boom. Right, so we could go down to a 1 minute chart. Once again, we already were on the 1 minute chart, but so 15-minute premium BPR. Once again, look at how precise this ends up getting, right? If you identify the manipulation, 15-minute, you can honestly just use common sense to like you don't even need to know everything. You can just take a high probability trade without knowing. Like, I don't even know every little detail. I could literally just say, oh wow, it's a 15-minute BPR in premium, 1 minute change in state, and a liquidity sweep. Can you check the 15-minute IPG long off the NWOG why it failed? Yeah. Let's just make the BPR a little bigger because I'm including this and this. So 15-minute premium BPR, and we'll look at that. We'll look at that next. And then yeah, 1 minute change in state here. Same thing, same thing. But the key was to understand the drawn liquidity. I don't like taking these trades though because once again, if you're wrong, you're gonna get wrecked. So you just have to use this to mark out a model for bias. That's what I would do. So I guess what we could do, I have an idea of how you could take a trade within this. I'll show you guys. I will look at the NWOG trade. I'm just trying to get everything. Anyway, let's just leave it like this. And I think it was maybe a Phoenix model too, but it's besides the point. So right at 852. That's kind of cool. 850 flow state inducement, 15-minute aligning with the 1 minute. Okay. So the way I would like to take this trade, in my opinion, the high probability way to take this is you could wait for 1 minute change in state right here. So this, when we get this displacement break of this low, I think this is how you probably need to take it. Once we break this low with displacement, you enter on the close. So now we have a 15-minute BPR here, and then a 1 minute change of state. And when you see this, it's very obvious. Now you could even wait for a higher time frame one, actually. Yeah, I'd probably just do the close. Oh, yeah, the 2 minute closure is super clean. So maybe just take this as a 2 minute. I like this as just a 2 minute closure. I think if you take this as a 2 minute closure like this, it's hard to go too wrong. So I would go 2 minute CISD, and then I would go 4 projections of this order block. So 1, 2, 3, 4, bang. You could even target 7 projections. And so I'm not going to mark this as flow state because it's not the aligned time frame. I'm just going to mark this as just a change in state closure. But once again, you can tell when we get this closure, we're probably gonna go run liquidity. You know what I'm saying? So 9 o'clock CISD close. This is 9 o'clock, right? Yeah, 9 o'clock CISD close on the 2 minute. Okay. Can you let's see? Can you check the 15-minute IPG long off the NWOG why it fell? Yeah, let's look at that real quick. 15-minute IPG NWOG long off why it fell. 15-minute IPG long off the NWOG. Oh, this? Wait, I think you're talking about the NWOG here. This one? Oh, you were looking to see this be low resistance. Yeah, this wasn't low resistance liquidity. That's why. So you were thinking, okay, we had the inversion to the upside. This is gonna be low resistance, and then we're gonna go run that. I'll show you why. I'll show you why. Yeah, I can totally see the train of thought here because I probably would do something similar if I had not done all my analysis. Because what you're saying, right, is, okay, we swept out the lows in this consolidation. New week opening gap. So we sweep out all the lows. Current week, new week opening gap. Oh, Okay, you're talking about this? Wait. Current. You mean the lower one? Because this is the one we're trading in right now, is what you're saying. Right? Are you talking about this one? Oh, this. Oh. Oh, yeah. Bro, I talked about this. In my market recap, I talked about this. So, this is a fascinating thought, right? I talked about this. This is gonna blow your mind. Sometimes, Kelshi, sometimes you have to realize that pattern trade looking IFGs like this, like, I'm not saying it's got great signature, but the issue is it has great signature, and I'm not trying to think of how to explain it. Sometimes the market will make these pattern trading looking IFGs. They'll make these pattern trading looking IFGs that will fail to induce people to go long, to actually target a drawn liquidity that's to actually target a real drawn liquidity that's lower. So always keep in your mind is this IFG does have good signature. This IFG does have good signature, but is it against the drawn liquidity? Because what was happening at this time was we had not filled the, well, I guess we swept out relevant lows here. But the main thing, in my opinion, was there's quite a few things actually. We had the RTH. Well, I guess we had an RTH gap above too, right? This is where it gets tricky because we did have an RTH gap above, but we had left the new week opening gap unfilled. We had left the RTH gap unfilled, and so just always keep in the back of your mind. Sometimes the market. I want to show you. I want to show you this real quick. Sometimes the market, it's going to create these pattern trade IFGs to induce people to go long, and sometimes you just want to observe them, watch how the market's interacting with it, and then fade them. And I'll show you what I mean. Check this out. Right. So we got a reaction off the new week opening gap, but here's the issue. Right. We had not filled the new week opening gap. It was just a tap, and we had not filled the RTH gap. So we get this 15-minute IFG. What happened? What happened at the high, right? We get a 15-minute IFG, but we have a amazing 1-minute rejection block. 1-minute rejection block with SMT. Check this out. So what happens a lot of the time when there's a pattern trade IFG is, or like a real, it's got good signature, but that's the issue. It's just it's got good signature, but it's sometimes the market will make those IFGs to induce people to go long, and then the true drawn liquidity is lower. For instance, filling the RTH gap here. So here's what happened, right? We got SMT with this 1-minute rejection block. What is this? This is the Phoenix model, right? The one that the Powell trades model. So we had the RTH gap here, the unfilled new week opening gap. So the 15-minute IFG, although it looked good in this specific instance, was actually used to induce people to go long into this rejection block to provide them liquidity to short into the rejection block with SMT. Check this out. To go target the real drawn liquidity, which was the RTH gap. So why is this rejection block good? Why is this rejection block good? Because it takes out these highs here. Boom. So when do we get the closure of the 15-minute? Right here. So it's actually perfect, actually, right? We get the 15-minute IFG closure right here. So sometimes you want to trade against a pattern trade looking IFG when it's against the true drawn liquidity, which was filling this RTH gap. right? So 15-minute IPG here. This is when we got it. But then we got SMT with this 1-minute rejection block. And then it went lower. I don't think it was terrible trade though. I don't think it was terrible. It had good signature. And sometimes there's just trades are just gonna fail, bro. But the reason why this failed is because we got SMT with this 1-minute rejection block, and sometimes there will be cases where IFEGs will just be used to induce people to go long in one direction to target the true drawn liquidity in the other direction. So that's why. Hopefully that helped. Let me know if that helped or if you want me to explain anything else. But it wasn't a bad trade. I think it was a good trade. I think, once again, the issue is just unfilled NWAG, unfilled RTH gap below, and sometimes when there's a pattern, like when there's like a super IFG with super good signature, but there's not really like the higher time frame model framed. Like for instance, like you're just basically taking an IFG back up, and I'm not saying that's bad because Dodgy does that all the time and it works out. But a lot of the time, like I like to see, for instance, here's a good example, right? It's a move back lower than back up, but there's no higher time for like. I'm not saying this is totally bad because Dodgy does this a lot, right? Dodgy will say this is a fine trade, but the trades I like better are IFGs in the context of a really clear market maker sell model. So for instance, right, we have this market maker sell model, and then we get the 1 hour inversion to go run the low resistance lows below. Like something like that, right? Where I have the entire model framed so I can use that to go lower, versus I don't like it as much when I don't have the whole model framed. Does that make sense? Now, it's not to say it can't work. It's just sometimes when the entire model is not framed and you'll get a pattern trade looking IFG, they're going to use that to induce you to go long, to use you as liquidity to go lower. So hopefully that makes sense. I need to use the bathroom. I'll be back. Yeah, I want to talk more about the way we could have gotten an entry on Wednesday at market open, because it's important, because we got to understand even. Yeah, exactly. The draw on liquidity was lower. It was a higher time frame market maker sell model. Strapman's back. So sometimes, guys, you actually, when the market's displacing, you actually don't want to see retracements to premium. This is something that is a super advanced concept. I talked about it a little bit. I don't know when, maybe on live a while back, but when the market's in aggressive displacement, check this out. When the market's in aggressive displacement, you actually want to see discount. When the market is in aggressive displacement, you actually want to see discount PD arrays holding, because the market is displacing. Discount breakers are incredibly nice for this. Let me show you. So we were getting aggressive displacement early in the morning. We have a 5-minute breaker, down close candle before this move higher. So 5-minute breaker, we had a sweep of the high. So let me show you. So see how it's in discount? I actually don't care here. In this specific instance, I don't care that this breaker is in discount, because we're just getting displacement. Let me show you guys. So wait, when the market is getting aggressive displacement, I would actually prefer to see the discount PD arrays holding, for instance, i.e. this discount breaker. Let me show you. So first we have a higher time frame key level. It's a 1-hour BPR. We're getting aggressive displacement. So here's manipulation, and then here's an inducement. Now we get a break of this low. And then this is the whole breaker. So 5-minute breaker. And then we only come in to about the first quartile of this breaker. It's exactly what I'd want to see, actually, right? Because we're getting displacement. Alright, well, it's not going to let me pull that up. But I actually don't want to see us retrace back into premium, because that's telling me that the displacement is not, it's not being a displacement. If it's displacement, why would we want to come back to premium? We don't. If we're displacing, we don't want to see us come back to premium. It's super counterintuitive, but it's something that I've learned through just chart time, just tons and tons of chart time. You actually don't want to see us come back into premium when the market's displacing. So 5-minute breaker. So higher time frame, we had a manipulation leg and then an inducement. So this is how you could have got in. So I was expecting us to get this full retracement back into premium. The market did not need to do that. So check this out. And I think I might end part one of this stream soon because I kind of want to go to the gym and I just want to make sure I get everything else I need to get done today, like filming and stuff. So I'll probably do part two later today. But when the market's getting this aggressive displacement, I want to see this discount breaker hold. And then we can go, okay, we got a sweep here. We got a sweep here. Where should I start with prop trading now? Right now the firms that I'm trading with are Top Step and Tradeify, and Apex is fine too. There's just gonna be more rules. Yeah, the ones that I'm using right now are Tradeify, Top Step, maybe Apex, and then there's also other good ones as well, like Alpha Futures. I haven't tried, but I've heard that they're good. And Take Profit Trader. Apparently, Take Profit Trader is like the best one according to Jan. So Take Profit Trader, that's a good one. Any of those five, Alpha, Take Profit, Apex maybe. But Apex is kind of a pain sometimes. If you do use Apex, use my discount code. Jake trades it. And then Top Step and Tradeify. So we get 30-second change of state. We actually don't want to see the market come to premium of this breaker because we're getting displacement. That's the whole point. And then entry on that retest. And it's like, this was probably, if I had to guess, this was probably actually a propulsion block as well. So this is probably my Dynamis model, but I don't know, it's just not. I'm not going to go into it. And yes, this trade is realistic because I knew the draw on liquidity. I knew we were going to go lower. I just thought we had to retrace the premium. And once again, when the market's displacing, we don't need to do that. And so that's a lesson that I learned this week. The market's displacing, you actually don't want to see the premium PD raise get traded to. So we might need to make a name for this when this occurs, I don't know. For now, I'm just gonna call it flow state. Nah, I'm just gonna call it flow state. So flow state retest 928. Five-minute, 30-second. Okay. For now, guys, I'm gonna end the stream. And I might do part 2 later today or tomorrow. Maybe tomorrow, honestly. Yeah, that's probably what I'll do. I'll probably do part 2 tomorrow. Man, there's so much to review every single week. Like it would take me like a month just to review 1 week. I mean, it's crazy. But yeah. Anyway, I'm going to end the stream. Thank you guys so much for watching. I'll see you guys in the next one. I'm going to head to the gym. Peace out. Can you explain PD array? Okay, I'll explain the PD array. And BFR? You mean BPR? PD array just means key level. So PD array is anything that you know. So like it could be a fair value gap, order block, breaker block, rejection block. Those are the main 4. We'll just leave it there. Those are the main 4. There's more though, but those are the main 4. Yeah, BPR. BPR is just overlapping fair value gaps. So if for instance this is a BPR. But I also have short form videos that explain all of them. So let me show you an example of BPR. So this is BPR right here, right? Overlapping bullish and bearish gaps. And you see how the market uses that? Okay, so yeah, BPR is another example of a key level. And then look at how it gets reclaimed later on. So BPR is overlapping bullish and bearish gaps. Alright, I'm going to end the stream here. Thank you guys for watching.